Okay, even more updates on what we've got going on. Listen, the crazier the news, the more you should be hearing from us. That's what this is. You know, the big headline yesterday was Russia invades Ukraine. They've started a war. How long does it last? Anybody's guess. What does that mean for the markets? Again, anyone's guess. But we like to go back and look in history and see how things have played out. So we've got a handful of wars here. Vietnam War, Gulf War, Afghanistan War, Iraq War, the Crimean invasion back in 2014. Again, this is not the first time Russia's done this to Ukraine. But what has this looked like in the markets previously? Every one of these charts show in that little gray shaded area, that was the invasion period. You actually wanted to be in. It was a very good opportunity in the markets. Really, the only bad one was 2001 during the invasion of Iraq, Afghanistan after 9/11. But we had a lot of other stuff going on then. You know, tech bubble was bursting, 9/11, etc. For the other 4 out of 5, it's been a pretty good success rate. Again, we don't have that crystal ball. We don't know how this one plays out. We're just trying to read the tea leaves, but I think this is a pretty interesting chart. I think the gist of this is it made sense. Hindsight's 2020, but it made sense to buy the invasion. Okay. Another chart for all you newspaper readers out there still. This was a snapshot from a Wall Street Journal. Talks about the impact of global crises on the Dow Jones. So we've got, a whole slew of things, different invasions, wars, JFK assassination, an 87 stock market crash, different, World Trade Center bombings, Japanese tsunami, you name it. We got COVID still on there. So what it looks at is what did that actually do to the markets? And that's what you'll see in this column. Pause the video if you need to focus on this. So it shows each one of those events had some sort of negative reaction in the markets. But then what was the follow through? What did the markets look like 3 months later, 6 months later, 1 year later? And that's what you see in this column. It's not green, but we got plus signs, okay? So we got a lot of plus signs in there, meaning, if you made the knee-jerk reaction when the crisis hit and you got out of the markets, you probably missed the rally back, and that's a tough thing to miss, to lock in those losses and then not be able to gain it back, okay? So I don't know what the success rate on here is, but it's pretty darn good of just staying the course, making some fine-tune adjustments, sticking to the game plan, and it's going to work out every time. Thank you guys for the time today. We'll be back in touch soon.